All right, welcome guys. Welcome to Thursday analysis. So I'm just going to try and be quick with this one. Okay, so I'm going to start with C500 because I've been anticipating a setup here. It's just that the pattern is refusing to sort of materialize, but it can still potentially play out. So first, we're going to check the weekly. You see that weekly is fast approaching our 50 EMA here on the daily, where price can actually reach before it actually decides to sell. At the same time, slightly above the 50 EMA, we've got liquidity just above this level, which is coming on from this week here. So from this area to this area, that whole zone is a sell zone for me. So price looks like it could sell, but I'm still anticipating them to interact with these levels before we actually get a good sell. Dropping down to the daily, you notice that we had a strong bullish engulfing yesterday. So this price can still continue pushing up. Going down to the 4 hour. 4 hour now is showing me something different. It's showing me a possible retracement to that push up. So why I'm saying there's a possible retracement is because firstly, we've got a hanging man and liquidity was taken. This should be today. And I was anticipating price to at least get to at least the 13 EMA somewhere here or anywhere in this level before they potentially continue to those weekly zones. You cannot hear me. Okay, let's see. Still you cannot hear me. Kindly confirm. Wait, let's see. Okay, kindly confirm if you still cannot hear me. Okay, all right, perfect. Thank you for joining. So see. So yeah, based on this 4 hour view, they could be a short-term sell. There could be a short-term sell. So to get that short-term sell, we need price to actually give us a pattern to confirm the short-term sell, which we have H1. Okay, so H1 came, gave us a reversal pattern. If you notice, that's where I marked the order block on M15. And price is sort of back into that area. So we could still get a retracement just to take out this low and this low, which would be a short-term sell. Then price can still potentially push up. At the same time, this is also a zone where that sell can get to. So that area there will be a support zone. Let me get an exact value, 40, 75. 40, 75. Okay, and this low here, which is today's lows, the price is on 40, 90, 40, 90. Okay. All right, so currently this is how I'm viewing it. We might potentially get a short-term sell, and this will be the target, or basically the 50 EMA on the H1 will be the target if the short-term sell happens. So going to M15 where we will locate the pattern. Firstly, we are trading around yesterday's high. That's the first thing. This was our pattern here. This was the immediate order block ahead. This is also an order block. We had a short-term move here. Excuse me. So I want to see how price is going to act here. If we can get price come back below the 50, then they will definitely come back to the 200 with that short-term sell, and I can execute a sell on this trade. So I was just also watching here. I was also anticipating a possible baseline bounce. So let's see how price will actually play out around this area. Then, so that's my current view for C5. They're going to see 300. So much going on here. Okay, C300, you can see yesterday's close ended up being a rejection, even though I was anticipating potentially maybe price to get here. But this is showing that price would come down. But at the same time, we're literally trading on the 13 EMA, which is now in between price. So once your moving average is in between the price, that usually signifies that price could potentially be ranging. So let's see if that's the case and it's visible maybe on H4. H4, I do not quite see the range here, but there's a lot of fake moves. So if you notice, we had a nice impulsive move to the top side. Price showed that they wanted to continue, but then they broke a structure to the downside. So could they be coming down? That's also possible. So here the trend is not clear. It's not clear whether it wants to come up. It's not clear whether it wants to come down. So the best way, if price is not clear, is to wait for a few candles to paint first before we engage in the trade. However, if price decides to come and break this low, that will show that price is actually keen or eager to go to the downside. This will be a potential BOB, and this will be the impulsive move. This will be the retracement. So I would love to see another impulsive move, then a retracement, then I'll take a sell. That's the only reason which will make me take a sell. Otherwise, for now, there's no direction on this particular asset. There's no uptrend, there's no downtrend, in my view. I still need more confirmations to actually come up with a better setup. So this one is on pending. We'll just leave it like that. C1, I noticed when I came earlier to the charts, they started selling from here. This was the order block. And from here, there was no pullback. They simply have been dropping, and this started moving at 2 a.m. SA time. So there was no way I was going to trade this. I was already sleeping. So the only thing which will make me take this trade would be a retracement. And again, points of interest would be this order block, this order block, and this order block. These are all supply zones where price can retrace to before selling. Again, you can see structures have been broken. So I would most likely want to see a retracement first for me to engage. Otherwise, I might only take the trade maybe tomorrow, depending with how today closes. So again, price is reacting off that 13 EMA. This is a nice rejection. But if you zoom in on the daily, you will see there was not even a stop hunt today. This price never delivered to the upside. You can see the daily chart just started by the open and selling. There was no stop hunt to the high side. The candle is more or less like this one, no wick to the upside. So we just keep our mind open. Anything can happen. They might decide to retrace during the day and give us an entry. Then we can take a sell, and we'll be targeting these lows as a take profit, or maybe 5,700 as a take profit. So the only thing we don't have for now, I would say, it's an entry. 4 hour is also broken in structure. Left a fair value gap at the top here. So the fair value gap is right here. This is from the 4 hour, which is right there. So that's a point of interest for sales, potential sales there, but we need a retracement first. So that's my view for C1000. Then going to B1000. B1000 is sort of moving sideways, respecting a zone or this level here. If this becomes our peak, this would be our order block. So we can only buy when price comes above yesterday's high. That's where we can safely buy from the current view which I have. So I'm just going to start with the weekly. Weekly, you can see price is showing signs of being delivered to the top side, and we're still anticipating price to potentially come back to these equal highs on top here on the weekly. If we drop down to the daily, we can see yesterday we rejected the 13. We had a nice buy. Today, price started by pushing down. It looks like it's bouncing. of this level here. I don't know where it was coming from, but I think it's this week. So price still has to come above for us to actually consider buys. Otherwise, they can still come and tap into the high of this particular candle. That week there, it's a level. So let me just make it clear. Okay, so that's a point of interest there. This one, let me actually remove it so that we don't get confused. So I'm anticipating maybe price will potentially get into this low level here before it actually pushes up. So that will happen with the current daily candle. Just need them to extend the low, potentially extend the low, then push up. At the same time, if we break yesterday's high, I'm still going to consider buys. So that's my current view. If you drop down to H4, you see we've got a slight rejection, price slowing down here with these candles. This is the high which I'm talking about from the day before yesterday. So if price can come and tap into this area, which is also on the 13 EMA, then we can look for a pattern to actually go long on this particular setup. If we go to the H1, price is now below the 13. So for now, we don't have any buy confirmation. We can only buy, like I said, soon as we break yesterday's high. So I'll just confirm where exactly yesterday's high is, and that will be the best entry point. Either we'll buy on yesterday's high, the break of yesterday's high, which is here, which is also in line with this particular order block which price is left. So what we want to see them is create a peak either here or here, then show us that they're coming up. Then we can take safe buys here, or if the pattern formulates anyway in here, so they might leave an order block. Let's say, for example, this is the order block and they continue to set a new low for today, which will be the new peak. Price will then break the order block, possibly retest, so we can have an early entry in here. Then as price comes to break this, we can look to scale in and potentially maybe we might get pullback. So that will be a scaling area as well. So for now, that's my view. And this looks like it might be a high probability trade. Yesterday, I think we touched on how price was moving from the time it opened, breaking structures. We had an early entry. Price took us out. We got back in after an order block was broken. Peak, order block, a break. We back above the 13 EMA, so this was a good buy. Those who missed it, we had another opportunity here with a fresh peak, close above, another buy. Then price actually retraced back into this zone again, back into this demand zone, and they still pushed. On this one now, the order block was a bit far, but if you're understanding that price is being delivered to the top side and you saw that rejection, you could still have entered here. So there were like 3 opportunities to get into that buy from yesterday. So today we'll just be patient to see how they want to act here. They will potentially take out the low, create an entry, then potentially push up. If they come beyond this zone, that will be a new setup altogether forming. Maybe they might be coming back again to this level, which is on the 200. So we'll just be keeping an eye on B1000. But after all is been said and done, this asset has got potential to actually pay us today. So we'll keep stalking on B1000. J10 is a special case. Let me see, because you mentioned you wanted me to explain something today. So let me just cross check on my Telegram. Let's see. Analyze J10 and step. Okay, fine. So you wanted us to look at J10 and step index. So I'm going to we're going to explain J10 now in greater detail. So I also want to highlight something. I remember when we had our lesson yesterday, we were eyeing this zone. Let me actually go to the H1 so that we can look at the trend. All right, so we're looking at this, and I mentioned this could be price actually wanting to push down. At the same time, there was nothing wrong with the buy here. That's why I said you can hold your buy, put your stop loss below the zone, and let's see what price does. So I'm just hoping you held on to your buy. But the main point I wanted to emphasize is the take profit. Where was your take profit, or where did you take profit on this particular trade? So if you are looking to take profit, the first thing is if you enter here, where is the next zone? The next zone is here. So this one was broken. This one was also broken. For me, this was the next possible supply zone if price was to come down. So if you notice, they actually got here, started to retrace. So if you're in this trade, as long as it pays you a risk to reward of 1:2 coming back up to this particular order block, you should take your profits, because there is no guarantee you're going to come up with a continuation of a buy, no matter what the price is showing. There is no guarantee, right? So from here, price then retrace. But again, what you had to notice is now this was a zone which we had, right? So for this, we're anticipating this, but then price showed us that it still wants to go up based on the higher time frame bias we had. So they did show a big impulsive move back up, even though no structure was broken here, right? They retrace. So now we've broken a zone and we are now retesting it. 1350 cross price is back above the 50 EMA, meaning that our trend is now bullish, right? So where is the entry? If you are going to enter this, you're going to enter after the pin bar or after this confirmation. Where is your take profit? Again, take profit has to be on the next area of liquidity where your price is heading. This is what I mainly wanted to say. Because sometimes you might hold and say, okay, this price will go up. Nobody knows whether the price will continue going up. So rather just aim for the next point of liquidity or the next order block or the next fair value gap which you see, and exit there. That's the best way I can explain these setups. So if you enter here, your target is the next zone, which would have been this supply zone. If you enter here, your target is the next level of liquidity, which is what we had. And you see, as soon as we took out that liquidity, we started retracing. And I always mention, if you see a point where liquidity is, most of the time, if price takes out liquidity, it usually retraces, because there's people who have buy stops and they need to be taken out in case price is continuing to the upside. So what's my view for today? So I've noticed that liquidity is taken, structure is broken. I've got a zone here. It's a demand zone or an order block or however you want to call it. So the only thing I can do is to mark the zone, right? From the weekly, we already know we are potentially bullish, so I won't do multi-time frame analysis on this one. The only thing I wait for now is price to reject. Once the zone is rejected, then I can enter. Again, from here, price comes down, we wait for it to reject, then we get a pattern. Wait for a rejection, we get a pattern. Wait for a rejection, you get a pattern. So H1 is a best time frame to confirm your rejection. You have to actually wait for an H1 candle to close so that you can understand, okay, now my H1 is closed. It's showing me signs that it has slowed down and it's rejecting this level. What do I do now? The next thing to do is drop down to M15, M5, M3, M2, M1, whichever time frame you understand. Then you look for a pattern. So yesterday we had a peak, an order block, a break, and a retest. Simple price action. Within this retest, there is also a peak and an order block, just to confirm that you are correct. Right? Stop loss below the order block or below this zone here, because this was also a demand zone and price actually came and tapped into it. Okay, it seems like this storm is almost closed. I'm not sure if you can hear the thunder there, so I'll quickly finish up. So today, it's the same thing. If we want to buy, H1 is to confirm first. Once the H1 is confirmed a reversal of this zone, then we have to identify the peak, identify the order block, wait for the break, then take the trade. There's also nothing wrong with selling from here, because remember, liquidity is engineered on yesterday's highs. yesterday's lows, weekly high, weekly lows, monthly highs, monthly lows on zones like that. That's where your liquidity is. So as long as you've got a picture that, okay, it seems like I've got an impulsive move here. TDI is almost showing me something. If you're going to use this as a confirmation of anything, then what you just need is the same pattern. You need your peak, you need your order block, or this one. Same thing happened. Price actually broke, then you sell. If you are selling in a retracement, there's no need to wait for the retracement of that particular retracement from a higher time frame, because price usually just goes to where it's going. If this is the correct order block or correct demand, it will simply come here, then they will start delivering it up. So usually there's also nothing wrong with having buy stops if you are really anticipating price pushing up. So a buy stop is okay. If they retrace, you can still re-enter and scale in. Same applies to this setup. If you're going to sell coming back into this order block, there is nothing wrong with a sell stop. Maybe the risk might mess you up a bit, but as long as you understand where your price is heading, this would be your TP because it's an order block for potential buys. Unless the price breaks and starts to us something else, this will remain a valid order block and potentially have to wait for the pattern to form, peak, order block, a break, TDI to also confirm something. Then we can actively trade our setup. So I hope that was clear on J10, and everything I'm explaining here, you can apply it on anything else you trade. Then going to okay, I need to respond to this. Respond. Okay, let me just finish the Zoom first. Going to V2501S, you can see from yesterday, price was doing what it was doing. There's also no clear trend. The moment you see your price or your moving averages in between the price like this, just know you cannot use the moving averages for your entry now, because this price is not trending. It's in a range or it's choppy. So if price is like that, you cannot use a fib. If the price is not trending, you cannot use a fib. Well, maybe sometimes you might apply it, but it might give you the wrong perception, because let's say this is a sell fib and we are looking to go to the downside. The TP here would be somewhere low here. So if the market is in a range, it won't even get down there. So I would advise not using a fib, especially if we are in a range market. Rather wait for price to either hit a support zone on the bottom or for price to hit a resistance zone on the top side. These are the only areas you can trade from. So you can either buy from here, sell from here. You can either sell here if you get a close, a break and a retest, or you can either buy from here if you get a break and a retest. So in terms of a trade here, there's nothing too solid for me. I usually don't like trading these markets because there is no clean direction. Right here, there is no guarantee we might come up, we might come down. So as soon as I start having doubts or no clear direction of where price is going, I stay off that market. Rather wait for the dealer to show their hand, then execute. Then I'm going to re-add step index just for a quick analysis here. So if we drop, let's see if we can start with it from the weekly again. Okay, so weekly already you can see price is being delivered to the downside. I'm just going to throw my template. So templates just makes my chart a bit clearer. So even here you can analyze your chart as long as you know what you're looking for. You can already see where an impulsive move, structure was broken, price retested, liquidity is taken, price might retrace, all those things. These are basics of like price action. But once we throw the template back, okay, are we setting all-time lows? I believe we are. These are the all-time lows. That's the first thing. If you're using TDI, you also understand there's something which Steve talks about. Usually you get price creating one leg outside the band, the volatility band, and one leg inside the band. We also want to watch if we might reject on the 32 level, which might start to give us maybe a reversal. But again, it's not a reversal until a major structure is broken. That's also one thing you need to be in mind. So from the weekly charts, this is the lowest low, which I've marked based off this week. You can see that's where price retested, even though it's a whole zone from the candlestick body to the week. That's a whole zone, right? Then price from here started to push to the downside. Weekly candles are showing price slowing down. There is not much momentum. You can see with these weeks, the all-time low has been set, right? It's been set, and price might retrace. So here we have no strong downtrend. Yes, we are in a downtrend, but it's not strong. We are now anticipating a potential reversal. So our bias is on either side. Whatever we see is what we trade when we drop to the smaller time frames. If it's a sell, it will be short term. If it's a buy, it will be short term until a major structure or a major zone has been broken. So on the daily, you can see we're still below the 13. That gives us a sell bias. At the same time, you notice that liquidity was taken by this week, and it shows us that still price can push up. So again, daily has got two sides to how this price can actually move. So what you also want to do is you want to mark this low, which is the all-time low, and you want to mark this high, which is the highest part of this particular order block here. Now we've got a range to work inside. We drop down to H4. You can see the range clearly here. Let me just put 81.13. 81.13. I'm just making that line straight. Okay, there we go. Then the lowest lows are currently on 80.23. 80.23. Okay, so now we've got a range to play with. Within this range, what do we have? Excuse me. Within this range, we've got price giving an impulsive move, a retracement, but then usually price has to respect here for this to be a better retracement. So this one, where was price coming back to? Price was potentially coming back into these levels here. So I'm going to put zones there. So we've got this low here. We've got this low here, like that. So if we were looking for a potential sell, where can the price get to? So now we need to use the candlestick body and the wicks on the bottom. So that's a possible range where this price can get to. If they are going to reverse from a higher time frame, we need to see price just respecting this or just taking out liquidity, then starting to push up. Then for the reversal to be valid, this structure is to be broken and price is to show us that it actually is now creating higher highs and higher lows, especially on the H1, which is our main time frame to get the trend, right? So how are we trading this today? Like I said, potentially price might come back here. We're still trading below the 50, we're below the 13. So from H4 now, we've got a bearish bias, right? We drop down to H1. H1, we're trading below the 13, which is the main thing we want to see. We are also below the 50. And which structure was broken here or retested? We've got this low here, which is this particular candlestick. This is also an order block, but I usually love to mark the wicks because sometimes that's where your price will react from. So from that level, if this is the impulsive move for what we think might happen, it means now we've got an intraday trend. We've got an intraday trend and we can potentially run a fib from the highest high. This one is not so clear. I'll use this one. Price came, respected the 50 and the 50 EMA and the 32 level. Do we have a sell pattern now? So we've seen price rejecting a level. That's what we look for on H1. We look for candlesticks, which we know we look for candlesticks to reject a zone. Soon as we see this, we see, okay, price is rejecting, but do we have a sell pattern? Drop down to M15. we need to locate a peak, we need to locate an order block. Now you see that for us to sell this comfortably, price is to break today's lows. And at the moment, we've got a baseline bounce here. And now this actually looks like it's a W pattern, and this might be the peak. This could be a broken order block. Price came all the way down for equal lows. This price could be delivered up. So M15 is in the line. There is no confirmation of the sell, so we cannot sell. No confirmation, no sell. All right. Since H4 is giving us a sell bias, but the M15 is showing us the price might come up, where can we buy from and where can we sell from? We can consider a short-term buy if we come back above this order block. We can consider a sell if we break today's lows. Right, so this will be a peak, this will be the order block. We need price to break, retest, and continue down. But the fact that I'm seeing a pattern here, this almost looks like a W, and this is a baseline bounce. It shows me that this price might actually decide to push up, giving us the reversal we have from the higher time frames, or the potential reversal which we have from the higher time frames. So from a smaller time frame, I do not have any solid setup, because price again is showing it can go either way. Until we break this, we cannot sell. Until we break this, we cannot buy. But if I get a rejection here, I might consider coming down with this price. They could set or they could extend the low and give another baseline bounce. That right there will confirm price potentially now reversing, which is the reversal which we are anticipating from a higher time frame. So that's how best I can speak on step. And what will be the take profit? Remember, if you're day trading, do not hold your trades for long. The next zone is this one. So if we are to buy here, we're just targeting the 800 EMA or this order block here. That will be it. If we are selling, it's a short-term sell. Just stoke on price or trail, because it will be an all-time low being set. So price can get anyway. But if they do come, just watch if they create a second baseline bounce, so that we can get ready for a buy, which might become a long-term buy, since it could be a reversal. So that's how best I can explain step. C5 looks like it wants to continue pushing up, so I don't have anything on it. That was my only asset. So I think that's it from me, guys. I don't have anything else to add. Is there any questions? We've got about 5 minutes left in this session, and it's already raining this side. If there's questions, please send to me on Telegram, and I'll address them. Apart from that, I've got nothing else to add. That's it from me today. Thursday analysis on synthetic indices. If you're watching this on YouTube, please don't forget to comment if this material is helpful. Don't forget to like, share, and also subscribe. So thank you so much, guys, for joining today's session. I hope it was fruitful. Enjoy the rest of your day. Good trading.